Welcome to Finquinity's podcast, episode 7. Today we'll be doing something a little bit different. I would like to introduce a guest speaker today. His name is Myrillis. Myrillis, why don't you introduce yourself?
Hello everyone, my name is Morellus. I've been investing and trading for over 7 years now, and I've had a career in consulting where I've worked with financial institutions. So I've kind of had my fair share of seeing the market, seeing the job market, and how the greater market affects our daily lives. So I'm happy to be invited on and share some of my knowledge and some of the workings of what's been going on in the tech world with artificial intelligence and how that's been affecting the markets lately.
Yeah, I'm glad to have you. Let's get started. I think as we let's start off with our usual method. Let's go over the market, do a market recap of this week. I think starting off, we had a pretty calm market. We had a market that was generally moving upward as it normally does in environments where there's no adverse news. I think the big news from last week was CPI, inflation, and PPI. I think on that front, we saw, I think CPI was higher than expected. I think forecasted was around 2.7. We can have a look as well.
I think it was like 0.1 or 0.2 hotter than expected. But you can just pull it up.
Yeah, so looks like CPI was, actual was 2.9, and inflation rate year on year was 2.7 as forecasted. So actually a little bit lower than forecast, which is a good thing.
Yeah, but the month to month seems to be a little bit, is it cooler?
Yeah, it is cooler.
Yeah, okay.
Yeah.
Yeah, and then the PPI also showed some cooler data than expected. The month to month change was around 0.0%. So despite the fears of the markets worried about tariffs and how that can create some inflationary impulses, it seems to us and to the markets that the fears seems to be overblown. However, given that the data, is just for 1 month, it's still yet to be seen whether or not the tariffs will continue influencing prices later down the road.
And I think you can see in the market, especially how on the Tuesday and on the Wednesday charts, just how big the volatility for those candles are. There is, especially on Wednesday, at that time they have a crazy downtick.
That's another story.
That's a fun story.
Yeah,
I thought it was a great story.
Yeah.
And well, people were expecting worse, and results were not as bad.
Yeah.
So
and I feel like it's a bit reassuring. The fact that QQQ is hitting all-time highs shows that there is plenty of risk appetite. We're seeing Bitcoin consolidating a little bit. It's currently at like 117 right now.
118, yeah.
118,
all-time highs.
right?
All-time highs, yeah.
Close to all-time highs, right? So everything is pretty bullish. We also had some other big companies like NVIDIA also hitting record highs as well. They recently had, I think, their export ban lifted, right?
Yeah, so Jensen Huang actually was in Beijing a few days ago. He was speaking at one of the conferences, and they recently were allowed to import, I believe it's their H100 chips, which is the downgraded chips to China. And, well, I think this is great for NVIDIA, right? We see them reach all-time highs because of this. Many people are very bullish on NVIDIA. Their earnings are coming up very soon in August.
Especially with the news of the Meta data center, right? The Meta Manhattan-sized data center. I think we also saw, other large AI companies are also moving towards more and more compute.
Yeah, we do see that, yeah. The deal between Meta and NVIDIA, I believe, is valued around 18 billion, is what one interview said with Zuck and Jensen Huang. So it's looking very good for NVIDIA. But talking a little bit more about NVIDIA and AI, we see that there's a really big drain of talent for artificial intelligence. We see a lot of engineers being poached by Meta.
That was headline news.
Yep.
NBA style draft happening.
Yep. For their super intelligence labs, they've poached a lot of engineers from OpenAI, Google DeepMind, Anthropic. The best AI labs, and we see that the lift of the export ban on chips, showing that it's not compute that's the bottleneck anymore. It's actually talent, and you can see that there's like 40 or 60 people that are at the upper echelon of being able to continue and innovate and create new breakthroughs for these models, and they're in hot demand. Meta is paying upwards of 10 to 100 million per researcher, and we can see why. the company that wins this AI war is going to be the market leader, right?
Absolutely. I mean, for a while it's been OpenAI, but I think I have to give credit to Google. Their Gemini model, especially their Gemini 2.5 Pro, has been the market leader. But I think what we're looking to see now is obviously the impact of AI, not just in open source models or closed models. Can AI be added to Can AI add profits? Now, I think you work in the consulting space. You've probably worked in the space, in the AI space too. So what is your view? Have companies been able to transition and been able to utilize AI for their benefit?
Well, we can look historically, right? At the very beginning, artificial intelligence wasn't all that much, right?
No.
It was basically packaged like workflow automation, very much guardrails built in, hard-coded programs that can somewhat be prepackaged for different industries, but more or less it's one hard-coded piece of software that can perform maybe one or two different tasks and automate away maybe like less than 1% of jobs within that field, right?
Right.
But now we're moving more and more towards large language models that are able to actually perform tasks, and then moving from artificial intelligence to agentic AI, which is basically the key difference would be the previous iteration is you'd have to initiate the artificial intelligence model to help you do something, right? Add the right prompt into ChatGPT or into Claude, or if I'm coding into your tools like Sonnet or Lovable or Cursor. But now what agentic AI is able to do is it sits within like a large layer of data, usually within companies, right? And it has pipelines to every area within that company that's, of course, connected to the ecosystem and architecture. And it's able to see some of the tasks that employees need to do and basically initiate those tasks. And with a click of a button, your manager is able to approve or initiate these tasks. For example, one use case that we had at our company was with the supply chain. So say you had forecasting data for like shipping from say one facility to another, and you had like a weather incident, right? What could happen is it will see that in this weather, with this weather incident, you're not able to receive some parts from X facility, say in like Oklahoma. So what it would do is then look through all your different facilities, see which facilities have the parts, and then ask you, hey, we see the parts here. We know the time that you need to receive these parts at your manufacturing is at 12 p.m. This is the time that your truck can make it. Do you want me to initiate this request? And at a click of a button, it's able to adapt and tell you exactly what you need and initiate that for you. So really removing a lot of that analyst time that you might need.
The middleman, per se, right?
Exactly, yeah. So automating away a lot of that very tedious work that you might have to have an analyst crunch all the numbers, look at all the reports from each of these facilities, and then kind of come together, hey, like we have the parts from here and here, do we have enough time? You don't have to do that anymore. Of course, it's early stages, right?
Right,
so,
very early.
Yeah, so we don't have to be scared yet, but it really begs the question of what's the ability of AI to reform the workforce and remove some of these menial task type roles, like operations type roles, where AI can kind of replace some of the analytics that you need to do, and all you really need is like one overseer that can kind of look at what's happening and at a glance kind of comb through the data and be like, hey, like this is good, and initiate that task, right?
Would you say that, with this new iteration of AI, can it replace people who are doing what we call busy work? So work that is not really productive but more administrative bloat. Do you think that can get cut down because of this technology?
Well, it depends, right? To some degree, yes, but it's only able to see the data that you put into the system. So one really good use case is like schedule automation, right? Being able to help you with bookings, etc. And there's a lot of companies that do something very similar, like OpenTable for specifically restaurants. But for like a business person that say has busy work that's scheduled, or it's not in their calendar, it's kind of hard for the artificial intelligence to be like, hey, let me block off your time like this, or let me help adjust, because it doesn't have visibility into that data. So until we have that overarching view for AI to capture data and bring in everything, I don't see all busy work being automated away, but it definitely transforms a lot of roles where you're more focused on value delivery and less on cleaning up stuff, right? For consultants, right, a lot of one big change is they have artificial intelligence helping create PowerPoints and presentations, as well as like LBO type models, financial models, off of previously provided data, like corporate data that they have. I think McKinsey's internal AI went through their thousands of presentations, and it's worked surprisingly well to be able to adapt to the style of McKinsey's presentations and provide that level of quality. And all you really need to do is just edit, and of course do the research. But again, AI can also do that. So it really begs the question on what the job market is going to look like once these tools are really released towards the general public as well as the general workforce.
Now, I think I'll add on to it. I think regardless of what happens, I think there would always need to be a human in the loop. Now, I work in the AI space. I'm an AI researcher. And what I often encounter is that if you have a domain expert and then a domain expert is looking over the AI's work in their domain, they are able to point out quite a few flaws, a few of them quite fundamental. And though if such a model exists, and like obviously it looks like we're going that direction of agentic models taking over more complicated tasks, I still think it would be very, very necessary for there to be a human in the loop at many stages. I think whereas you might lose admin type positions, you will gain extra positions for supervising in particular domains. So if someone is like a weather expert, they might be looking at weather data that's being fed into the transport. If someone is, a very, very good at PowerPoints, then they might be looking at how the PowerPoints are created, are the animations playing well, and so on and so forth.
Is there a limitation to this? Because I know we had a discussion about this in the past where you said architecture does limit the progression in AI.
Yeah.
Does that play a role in this development?
So here's what happens, right? At the end of the day, think instead of like you having to interact with OpenAI or your AI model 5 times in a row, the model is taking your job in that sense and interacting with itself.
Okay.
So previously, what you would have to do is, let's say I want to make a PowerPoint. I would say, hey, I want to create a PowerPoint. Then it'll give me instructions. Then I have to go do it. Then I say, okay, in my PowerPoint, I want to talk about sales of cars in Toronto. So then it will find the data and then it'll present that. And then we go back and forth. There might be like, okay, this said it was good, but what about sales? Can you give me a sales forecast for 3 years? So this would be happening back and forth. Now, before, if you had said, make me a PowerPoint presentation with the sales data for cars in Toronto with a 3-year forecast, it would have done a terrible job. It would have simplified it, oversimplified it, and you would have ended up with a pretty mediocre product. With Agentic, the idea is that it can now have this middleman conversation back and forth by itself so that it can take a medium difficulty job and execute it well by interacting back and forth with each other.
Okay.
I think the problem will still be a high quality job, and it'll be jobs that are not existing in the model. So there's like in a way a knowledge cloud. The model has knowledge of the knowledge cloud being usually the human knowledge, but the things that are currently not the human knowledge, new research or new developments, I think those are not going to show up in your model. They won't have the capacity to really move beyond the model too much. Now there is limited capacity, but not too much. And the second level is, if there's a flaw early in the system, is there going to be a capable enough detection to detect the flaw early and fix it? Because if a fundamental flaw occurs, like in this multi-step process, well, one error is going to cascade into a multitude of errors until the product becomes X quality to X minus 20 quality.
So you think that in the future there'll be jobs such as those that will have to correct and look after these weaknesses?
I think the jobs that will be protected will be domain experts. I think domain experts are going to be specialists, especially, are going to be desired. And I think for lesser intellectually challenging jobs, you would see supervisor type jobs where they would be interacting with middleman prompts, fixing them, diagnosing them, doing quality assurance on them, and providing this data to the model producer, who would then take this feedback and improve the model for your needs.
I think if you compare like from now to the future, what's going to happen is one manager will be able to do the work of like 10 subordinates, where they might have one analyst or two analysts under them when they previously would have had 10.
10, yeah.
In addition, I think one sector that will continue to stay is like governance type roles where we're looking at like AI governance, both around like security, like ethical compliance, etc. Because at the end of the day, right, these models can't audit themselves, so it's either up to people to audit them or for them to audit each other. And those roles will always be in demand because, again, like after Enron, it changed the world of like accounting, right? We can't trust technology, we can't trust people, so you always need external eyes to look in and give you a report to say, hey, like these models are operating as they should be. So that's always going to be a thing where we're going to have to trust the work of humans more so than the work of machines, because there's always that room for error, right?
There's a very famous paper called Model Collapse. Now, what this model tells you is that in this experiment, an AI was trained on data generated by another AI. And then after a few cycles of this training, we saw that the models collapsed, as in their reasoning ability collapsed, their intelligence collapsed, and overall the quality of the output collapsed. And so I worry, I know it will be an engineering problem, but I worry is that as AI becomes more and more prominent, it's more and more seen in mainstream media, it's more and more seen really used everywhere, the next AI training cycle will likely include more and more proportionate AI content than human content. And so we might be going to this in this system where over time, the base models will get less and less intelligent, or will have less and less capacity to become more intelligent. But I think moving to the AI space, I think fine-tuned models designed for particular purposes, those will always succeed. I think we'll see maybe a less of a focus into general models and more into specific models. Models for companies, models for whatever use cases, warehouse management, etc.
So one question I have is, I know that in terms of generating our models, you use a lot of machine learning and AI tech. A lot of questions have been asked, from clients, and they ask, what protects us from other people replicating our technology? What do you have to say about that? What's your opinion?
Yeah, so in terms of architecture, a lot of the AI architecture, ML architecture, it's all the same. The difference here is about how well can the architecture be tuned to the specific task. To give you an analogy, that's like if you ask GPT to do a math exam, a grade 12 math exam, it might score 85%. That's the base model. What would set an expert aside from a novice would be, can I then train the AI, the GPT based model, to perform 99% of the exam? And that would be the difference between, other competitors and other AI developers, is how well can they take this model akin to a person, and how well can they coach, train, and tune the model to achieve the capacity that we desire. Yeah. I think let's take a moment here to look into the market this week. Next week is interesting. We do see, I think, two big earnings. One earning is Google, and another earning is Tesla. Let's take a look at Google first. I'm gonna pull it up in a moment. And what do you think about Google? What do you think about their portfolio?
Rose?
I think fundamentally it's hard for me to say, but just looking at purely technical and historically how it's dropped. It's dropped from its all-time highs back in January of 2025. I think there's definitely a lot of upside potential. I know that Google's models are definitely very strong comparatively to the other models on the market. Gemini's performing very well in many different
text to vision, image to gen is almost second or first.
Yeah, exactly.
Live streaming.
Yeah, so I think that overall Google still has a very strong play. Like, they're a very strong player within the field, and in addition, they still dominate search, right? Yeah, they're losing some market share to Apple, but I don't think any company is still able to compete with Google for search. So I think from the time being, as long as ads don't underperform like they did a few earnings reports ago, Google will still be more or less pretty bullish, and we still have a lot of upwards room, as seeing it's dropped around, I think, 10% from previous all-time highs, right?
Yeah.
So we still have a lot of room to at least return to previous heights. So I would say personally, I'm pretty bullish, at least in the short to medium term.
I agree.
Yeah.
And I think the bigger concern is, what is Google's future, especially with they're seeing, for example, the talent trade. The top experts from Google being hired by Meta and other companies, and also the future of search. I think we can all agree that since 2020, more and more people are willing to search using AI.
Yeah.
OpenAI search has been pretty big, and we'll see more and more models adapt that.
Yeah.
I think another thing that's good about the revenue stream is GCP. Google Cloud Platform is a very, very great source for even AI modeling.
Yeah.
I think the only companies like Amazon and
AWS and Azure. Yeah.
Azure, yeah, Max
pretty
up.
well against them, I'd say.
Yeah. I think in terms of access, I think Azure and AWS are quite popular, but I think Google Platform had its.
GCP is still doing pretty well. I don't know. It's hard to say long term what Google's vision looks like. They've been trying to diversify very hard ever since COVID. I think they had 150 billion in cash reserves at that time because they really had nothing to do with, and they sent a lot of money into their VC innovation lab, buying up a lot of random companies. Like they acquired Wiz last year, right? Cybersecurity, which is again not their wheelhouse, but they're really trying hard to diversify. So it remains to be seen how Google will be able to continue and diversify, seeing as antitrust after antitrust is hitting them.
Oh, yes.
So, the government keeps trying to break Google up because they're such a dominant player in search, and they do compete pretty anti-competitively, right?
Yeah.
So, it's hard to say if Google's going to be able to diversify in these other areas. And I think that, again, it's like what I said earlier, where the company that wins the AI war is going to be the dominant player for the next decade or two at least, right? So
I think we can all say that NVIDIA still will be a very, very safe bet for quite a long time.
Yeah, for sure. Yeah, I mean, no company can make GPUs as good as theirs, and compute is going to be always in demand. Even if it is not the top priority for companies, they're still going to keep buying into compute as they start ramping up their research. So yeah, it's hard to say what Google's future looks like 5 or 10 years down the line, but we can say that for now, it's definitely still competitive, and their lawyers are definitely able to still antitrust.
Yeah, that's for sure.
Yeah,
that's for sure.
As long as you can dodge the antitrust, should have dominance still.
Let's have a look at Tesla.
Yeah.
Tesla, now this is a mixed bag.
This guy has been bouncing up and down, right? We had quite a lot of scares. Recently, their anticipated news was their delivery of cars in, I think, June or May, something along that line, and it was higher than what most people expected. So the price, shot up a little bit, and since then it has just been moving up in anticipation of not so disappointing earnings, but also the market has been very bullish in general. So there just has been a lot of capital in buying the dips and just providing that support in this company. Now, to tell you the truth, I'm not sure whether or not those earnings are going to be good, right? A lot of people are saying it might crap, right? Who knows?
I think Tesla is it's a safe bet to stay away from.
It is. I agree. Stay in cash when it comes to Tesla.
Because the second thing is Tesla might have a great earnings or a bad earnings, but the market might react completely in the opposite direction. It's such a sentiment-driven equity. It's quite surprising how it still exists to this degree, but...
Yeah, Elon Musk is just such a controversial figure nowadays.
He is.
And with his reputation going down, I think that the brand definitely has taken quite a hit.
Yes.
And if you compare competitors of Tesla, while not available in the West,
BYD is a big one.
BYD is incredible.
Yes.
It's available in Europe, and it significantly outperforms Tesla in every single metric in terms of self-driving, in terms of the features and amenities that it has within the vehicle,
and
even
the cost.
in terms of
and the
price.
cost.
Yeah,
the biggest
exactly.
one is the price.
Well, okay, that is a caveat because, again, China is going to be heavily tariffed due to the amount of subsidies that they're giving to these auto manufacturers, due to the fact that I think it was 2018 or earlier, they actually brought Tesla into China.
They did.
Just so that it could spur the competition of auto manufacturers, electric EV manufacturers, and then pulled a PR stunt to damage the reputation of Tesla to kick them out. right? So China's been very strategic on bolstering their EV production, and we can see that they're really succeeding, right? BYD is significantly better than Tesla, albeit not allowed in the West yet. But when it is, I don't think Tesla has any room to compete. And even with our local brands like Ford, Mitsubishi, all the companies like Subaru are even developing EVs. So I don't think necessarily Tesla's going to have their edge like they do. And if we're talking purely computer vision, we've seen a lot of very bad news from Tesla, right? In terms of its ability to avoid collision and accident. And we know that LiDAR definitely performs significantly better. So I would say within the 5 or 10 year time frame, I'm pretty bearish on Tesla. But there is a lot of upside opportunity looking at previous drawdowns. From previous highs in around June, I believe, it's dropped 20% and it's recovered around 10%. So there's some upwards movement potential. It's definitely down like 30% from its highs in COVID, but there's room for growth, at least in the short term. But long term, I would not bet on this stock.
I think the general advice is to be careful, right?
It's to be careful. Although I do have to say, while we're confident, that competition is good, I've seen the cars from BYD. They seem to be fantastic, in many ways superior to Tesla in terms of pricing and just overall competitiveness. The question is whether or not Western markets will open to it. Right now, the North American market is closed off.
US definitely will not open to it.
They won't. They won't. It's just a matter of national security and bad politics.
Yeah.
Now the key market that I'm looking at is Europe, because right now Europe is a dumping ground for Chinese electric vehicles. Yeah. Sales there has been surging, their market share is doubling, every couple of months. It's quite ridiculous, and it's eating the shares of traditional legacy car makers there, especially German cars. They've been struggling in the Chinese market because they're no longer competitive, and they are beginning to lose market share in Europe as well. Forget Tesla, they're just losing it to Chinese.
They're losing it in US, Canada too.
Exactly, right. So strategically, I think in the long run, to be a devil's advocate, Tesla may not be a bad buy after all, just because I really don't think the European markets will continue accepting all this overproduction of these Chinese vehicles. Make no mistakes, these cars are worth buying if you can get your hands on it. The problem is that within time, those markets will be closed because they don't want to destroy their own
local
domestic production in lieu of Chinese vehicles.
It's actually funny though, because the biggest problem isn't actually regulation, because you can technically import a BYD, but the problem is unit economics. The tariff on Chinese imported EVs for both Canada and US,
it's around 100%.
100%, October 2024. So it really is just not a good financial decision to buy BYD, and if you do have that much money, I don't think
you would prefer
it's just the brand and optics wise, right? If you could get a Tesla, people just look at that brand more favorably in the West.
Well, not as much anymore.
Not as much anymore, but it's just in general, the way I describe it is having a Tesla is like having an Apple iPhone when it comes to phones, right? It's like a staple when it comes to these cars. It's just that brand and you're paying that premium. Now, whether or not it's robust because of Elon Musk's politics, that's a different question. But for now, the average person still doesn't mind owning a Tesla, even though Elon is still head of that company, right? Most of us, if we do want to get an EV, that's probably the brand that we're gonna shop first. Yeah. Right? We're not gonna shop for Ford's, electric pickup truck. That's just not our first option. We're also not gonna look at BYD because most of the average person haven't heard of that yet.
Yeah, before, that's true.
Right? So in general, those are factors that help provide some form of support for Tesla. Now, is it fair? Is it pro market? I don't think so. Right? I don't think any of this is pro market. In the long run, this might actually screw over Tesla as a company because they might get more complacent, they might get lazy, similar to what happened to Ford, GM, and Chrysler. This is why Chrysler is in a complete meltdown right now with Stellantis. So my biggest fear is they get complacent. We do have other American EV brands like Lucid and Rivian, but they're just doing their own thing right now. Yeah, their prices are always up and down, and and some of them are even considering reverse splits because the prices keeps going down, right? Yeah. So I don't know if they're going to be viable competitors in the future. On that note, though, I do want to say that Trump's big beautiful bill that was passed has in effect removed EV tax credits for future buyers. So that might hinder the competitiveness of Tesla, but that also affects EV industry development in general
altogether,
in North America.
I think let's talk quickly about I think in terms of market events next week. Looking at the data purely, there are 3 data events, but they are going to be rather minor in the grand scheme of things. Tuesday we have Jerome Powell's speech. On Wednesday there is existing home sales data, and on Friday there's durable good orders month to month. These are, in the grand scheme of things, minor update. I think the Feds are still going to be saying what they've been parroting for quite a while, that they'll wait and see the impact. People are pricing in cuts in September nowadays. So well, let's wait and see. I expect there to be continue the same message. We'll continue to monitor data, especially things are changing. Are we aware of any update about the tariff situation? There's some tariffs upcoming.
So August
90-day
1st.
delay, right?
90 delay.
Yeah, the taco trade is still intact. Right now you always just delays and chickens out. So anytime there's a Trump-induced dip, the recommendation would be to just buy the dip. To be honest with you, from here. Now, on that note, though, I want to talk about a little bit about Powell and the little market dip that happened a couple of days ago.
Let's have a look.
So what day was that? When did that happen?
Was it Wednesday?
Wednesday, yes.
No, Wednesday. Okay, yeah, perfect. So whether or not this is a coincidence or not, but when Trump made I think was it a tweet, or did he just approach the lawmakers?
I think it was a tweet.
Was it a tweet, or was it a speaking period?
I think from what I've read, I'm pretty sure it was more of the fact that he drafted a letter and he showed it to his lawmakers who were in his party, and they were in support of him trying to find a way to fire Powell through legal means. And that was reported by mainstream media, and as soon as the report got out, markets took a dive, and funny enough, it actually hit our KRM line. And then it bounced right back. Whether or not our model was accurate in the sense where it, predicted the bottom, that's a different question.
I was able to capitalize.
We all did, I think, in a sense, right?
Yeah.
So that's just another example where the market will freak out just a little bit. It will seize up when there's some sort of Trump-induced, news, but then quickly shrug it off, knowing that
he does not follow through.
He does not follow through, exactly, right? And
I think he, in the interview, a couple hours after, also just said he's not
interested. There was actually a very funny, I forget if it was a Twitter post or an interview with 2 heads of big financial institutions. I forget where, but they respectively made $900 million and either 1.5 or 2.5. So it's a lot can be said about whether that's some sort of induced insiders trading for the financial elite, but Trump has been really volatile for the market, which is good for those who are buying in and out, and very scary for those who are just holding. I think long term, I don't agree with JP Morgan's news that we're going to see a flat S&P 500 for the next 10 years. I think that the market fundamentals wise, we're reevaluating how we look at stocks. I mean, back in the day, you would see a 3x, 4x PE for a safe stock, and growth stocks 10 to 20. We're seeing 500 continue to pump at a 520 PE, and it shows no signs of slowing down.
That's right. Yeah, and overall, based on Morellus's comments, right, I do agree that the fact that some of these big institutions are way too bearish, and I do feel that they're scaring, long holders, and maybe even inducing a dip, just because of how the math works. When you have inflation being positive for 10 years, you're not gonna have equities, which are essentially inflation hedges, stagnating for 10 years. This isn't like Japan, right, where Japan's going through deflation. This is the United States. Their inflation is high enough for it to be a problem, to the point where we can't even cut interest rates.
Right.
I doubt that, with inflation running above 2%, you're not gonna see that being reflected in the stock prices, because a lot of these companies, like utility, even tech companies, right, they have good pricing power. They're not gonna just let inflation erode their earnings power. by keeping prices here or even letting it deflate. That's just not going to be in the cards unless there's something serious going on, like a recession or something.
Mm-hmm.
And if that happens, you're not going to have inflation.
Yeah, if that happens. I mean, recessionary fears have been there for quite a while.
Yeah.
And it's just yet to be seen. I think overall, it's good to just be in the market.
Yeah, just get exposure, right? When you're, this goes back to like the audience who I expect to be a bit on the younger side. Just have exposure. Just buy the dip anytime you see it. If you're not expected to take the money out in the short term for vacation or for any other emergency expenses, it's just better for you to lock it in here and then look back 10 to 20 years down the road. You will see the stock price, go up eventually. That's just how the math works.
Yeah. And
you will get your returns. Now, whether or not your returns can be optimized, that's a different question, right? Mm-hmm. But I wouldn't panic if I see some sort of headline news saying there's war or Trump makes another scary tweet. It's just there's always going to be volatility in the markets.
Yeah, and what I would say is even a better strategy than that is just close your eyes and dollar cost average.
Yeah. Voo and chill.
Yep. Just keep buying. Keep buying.
There's really no downside to continually dollar cost averaging the S&P 500. I would say QQQ maybe a bad time now, but either way, as long as you continue buying, whether it goes down or up.
Yeah.
If it goes down, you're buying at a better price.
Yeah.
If it goes up, your initial capital is appreciating. So there really is no downside. And as most people say, time in the market beats timing the market, right?
Exactly.
Yeah.
Exactly. I think we should probably finish out the podcast today with a last segment of what do we forecast for next week? Just a overall prediction.
Well, there's not a lot of news going on, so I'm pretty sure QQ is going to be more earnings induced this time around.
Yeah.
Now, just based on what I've seen in the past, Google seems to be a decent mover. Tesla, not so much, just because I think people just look at it as a black sheep. It just does its own thing. But if Google's earnings are solid and they're reporting some news that might overspill into other AI companies like Meta, for example, or even NVIDIA, and you might see those prices being reflected. I don't think it's going to seriously happen, but I have seen that phenomenon happen before. But I think overall I'm still pretty bullish. We look a little bit overbought here.
Yeah.
So I'm not surprised if there's going to be some sort of like pullback.
Slight pullback.
But the pullback won't be based on like some sort of event-driven fear, most likely. It's just going to be based on technicals here. There's just not, the prices just needs to consolidate a bit before it can continue going up. I would say the same thing about Bitcoin. Bitcoin also needs to kind of consolidate. It ripped from like 110 to 122 over 2 weeks or so. So that price level is still very new, still very scary for a lot of people who've been observing Bitcoin, and we need some buyers stepping in to consolidate that price.
Yeah, seems solid.
Yeah, any last words?
Yeah, I would say this is definitely really odd for the summer. A lot of volume considering what normally happens in the summer. So yeah, I think that's looking positive for the market, and keep buying.
Keep buying.
Keep buying the Boo and Show.
Yep.
All right.
Can't agree more.
Yeah.
Well, that's it for today, everyone. Thank you so much for watching.
Or listening.
Listening. That's true. That's true.
Right. Yeah, and we will see you next week. Thank you all.
Thank you all. Bye-bye.